what does this weekly chart show us? What clues does this weekly chart give us? What can we deduce from what's going on this by just looking at the weekly chart?
It's in a downtrend.
Okay, good. So we know the direction thanks to the weekly chart.
Yeah.
And confluence with the moving averages, and it shows us some structure, yes?
Yeah.
And it shows us that it's near the EMA now. So it's giving us a whole lot of clues, and the good news here is that not everyone uses the weekly charts. Yeah. So it's a very big advantage that we have over retail traders, because retail traders, they are only looking at either one chart only, or or they're looking at maybe the hourly at most, but nobody's looking at weekly and monthly for the main direction. So for me, the weekly is giving me the idea whether we are in a range, or it's telling me that we are in a trend. It's giving me the possible pip value in between this area here that we call the playing field. And it's giving us the possible entries if it gets up to a level, and it gives us a possible target as well. So it's giving us a whole lot of information that we can use, and that's just on the weekly. So that would benefit us a lot when we are taking any sort of trades. I'm going to just mute the room, yeah?
Fine, mate, yeah.
So it gives us a whole lot of clues whether we're going up or down. It's giving us the possible entries and the targets and the direction. And that's all from the weekly chart. So what we have here, it doesn't only show us the direction and the targets, it also shows us that we are either trending like it's doing here, and in this area it shows us that it's in a range. So how does it show us that we are in a range in this area, and how does it show us that it's in a trending situation on this side? And that's easy with the EMAs now. So not only do we see what's happening on the chart with regards to the price action, but the EMAs are also crossing over all the time here. So there's no direction. So it's crossing over here, it's crossing over there, and it's again crossing over there. So which means that there is no direction in this area. It's ranging. But if we come over to the left, to the right-hand side here, we see there's one crossover, and that crossover is telling us that it's now changing its direction. Used to be long, and now we're going short. And there's no other crossovers of the EMA. It's no intertwining like it's doing on this side. So everything is smooth on this side. We have two lines nicely spread apart, and it's no intertwining. And we have the price action where we have the highs, and then the lower highs and lower highs, and then the lows and the lower lows. So everything is looking hunky-dory for a trend in that situation. So here we see the range because of the intertwining, and then we see the trend because there is no intertwining of the EMAs. So that's all on the weekly chart now. So the clues and the confirmation that the weekly chart is giving us is very powerful when we start looking and dropping down to the lower time frames. Now the 633 EMA, what do you think, you can just type it in, is the use of the 33 EMA? Just everybody just type in, what is the use? Why do we have the 633 EMA there? Good, it's a resistance in this case. So if prices gets to there, and it shows us a long-term trend, yes. If you were in a buy situation now, if you were buying, then what would the 633 also be for you? If you had bought at this level at the bottom here. Yeah. So it acts as a whole lot of things. Yeah. It acts as a trending confirmation. It acts as a possible entry, and it acts as a potential target. And then that is especially stronger when we have our prices and stuff lining up with more price action and pivoting off of certain areas. So that's for our targets and our entries. Now, I would say it's also to show a long-term trend, but we're going to use that. We're going to use our 200 period moving average for. So for targets and entries is the main reason we're using that one. And then the 200 period moving average. When prices are underneath here, yeah, then it's always going to be easier for you to start looking for shorting opportunities. So it's, as we can see in this case, prices are far away from the EMA, but we do have some sort of a structure that we could follow. So instead of buying at the bottom here, because we are below this EMA, it adds to your conviction that it's going short, and you'll be able to ride out any sort of trends if it ever breaks out below a certain level. So it's always better to start trading below the 200 EMA if prices are below, and then trading long if it's above the EMA. So it just adds that conviction. It's just easier to buy when you're above it, and it's just easier to start selling when you are below the EMA. So that's your probable direction. I mean, everything is going to be a probability. It's just you stand a better chance of making longer term profits if you are going to trade in the direction of that EMA. And then the 36 period moving average. What do you think the reason for the 36 period moving average is? Yes, Mark, I'm recording the session. Yeah, it's a trend following EMA. Yeah, perfect. And it's acting as a resistance here. So which means that if you draw a trend line there, and you're going to get your resistance, and you're going to get a static trend line that you've drawn as well. So when you draw a trend line in this on this chart now, if you try and draw it as close as possible to following the 36 EMA, that is what it's there for. Yeah, it's to help you draw a static trend line. So it's the trend following EMA. And then the 12 EMA. What do you guys think the 12 EMA is there? Okay. So that's right, Gavin. If you get the price constantly touching the EMA and then pushing all the way back down again like a trend, it means that prices are so volatile. The strength of the shorting opportunities in this case is so strong that prices are not even able to get up to the 36 EMA for a proper relief. It's going down, and then it's correcting, and it's not even giving a chance to correct further because the sellers are so strong in this situation. The volatility is so strong that it just touches on the 12 EMA, and then it goes down without retesting the 36. On the live chart, when I go there, I'll show you how we use the 12 EMA on the daily and what it does on the daily. Okay, so which time frame are we going to next after you do the 4 hour or after you do the weekly? And what's the next time frame that you think we're going to do an analysis on? We did the weekly chart so far. So now we're dropping down to the daily chart. That's great. Okay, so this is the weekly chart on the euro dollar. So what we see is that we have a trend line that's going down there. So we are going to trade short. Also, what we have is this is where prices are at the moment, right there. So we move this up to where there is some resistance, confluence of a trend line, confluence of an EMA, and then we have our touches here on this side. And then as we can see, if we go to the left, we have more touches happening here. So there's very respectful line that. So when we're talking about this, there's one other thing that's also important that we need to start using, and that's what we call the figure. Does anybody know what the figure is? When we're looking at this line, why is it a good idea to place it here other than the trend line and other than the confluence of the area and other than anything else? We're talking about the figure. Okay, the figure is this is another trader, a lady. Yeah, her name is I forgot, but I'm telling you, she's an 80% win ratio type of a lady. She's been trading since 1987, and she's taught me about what the figure is, and this is what it is. Yeah. It's when you try and draw your line, like say for instance you got it here now and you don't know exactly where to put this. Then the figure would be 1 spot 11. That is your figure. And then you also have 1 spot 11.50 for the dollar, which is important. So we have 1 spot 1100. Your double zero is the figure. And then you have halfway through the 1 spot 11.12, which is going to be the 1 spot 11.50. So it's just to help you put the line there. Like this, yeah. But the thing is, what she has come across, Justin, is that for every single currency pair, there might be a slight difference. Now I'm going to show you what she feels for yeah, it's round about that figures. Yeah, it's round about that. But instead of the 25, it's the 30. Instead of the 75, it's the 70. That is for the euro dollar. And then on a lot of the other pairs, instead of 75 again, what do you have there? It's the 80. So it would be 50, 80, and then the 00 for other pairs, like the faster moving pairs, like perhaps anything to do with the Japanese yen is going to be the 70. As we go along with a lot of these charts, I will show you which is the ones that she says is the best. Yeah. So let me just show you another example. So here we have we all know that this would be a good level. Yeah. That would be a nice little target there. So if we started off where prices are, all we do is we drag our support line down to an area. So now I'm looking at this, and then I'll go to the left and I see there's some more, there's some more, there's some more. So that's good. So I want to put it in the middle of the weekend and all of that. And then I'm looking at 109. In this case, it's going to be 109.30. So that there is my playing field. So obviously the area here is going to be a zone. So the only other thing that we've added here is our figure. If we're finding it difficult where exactly to place this, and we see we are on the euro dollar, and this is going to be 1 spot 11.50 because we are near to the you know, we are not going according to the figure at first. What we want first is everything else somewhere in that area, and now I fine tune it to the 50. So it's in that area. Like, say for instance, we had the top one here, I'll put it down there. So this one is 113.86, so we would put it at 113.70. There, round about there. Then we will look to the side and see, oh, respect, 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 respect. It's amazing that it just works at these levels. The next resistance level to the top there, and then putting it at 113.70, and then we can see the respect all across. So the probabilities of, if prices breaks this and you want to start trend trading this thing up, then that would be a nice target. And then the next one, I spoke to everyone yesterday and I mentioned that if you have these lines on your charts, we don't want anything more than 4 lines. 2 lines is actually the sweet spot for me. But if you into all these lines and stuff, then 4 is the maximum and a trend line, and that's all you need. So as we could see here now, we moved this because we had some support here and there and there, and then 106.30. In that area is where we are looking. So that is everything that you need on your daily. So we all know that we want to trade short here, and we all know where this is, where we have a target. Yeah, and to fine tune it now, we have this figures that we can also use. Now we drop down to our daily chart with everything already there. Yeah. So if we notice our trend line here now, we have another trend line, the 200 period moving average. So we don't really need to adjust this one. But if you do, yeah, it does, but very slightly. Instead, Justin, Jahirul, when we are trading most of the yen pairs, and then this is going to be the same. And with the pound, we use the 80. I'm going to send you guys a sheet that has all those little nitty-gritties on there. Yeah. So I started using her figure because the course itself that I did with her and the mentorship piece that I did with her, I've only, as I told you before, I take the best of whatever people has to offer. And for me, the best that she had to offer was this figure. Yeah. So this is why we have this in my strategy here now. Okay, so we have trend lines, and what we could do is we are on the daily chart now. So I'm just zooming out. So what you could do is try and adjust your trend line a bit, because you're now on a different time frame. You can just make it more suitable to that and try and draw your trend line closer to your EMAs and parallel to how the EMA is going. So that's your proper trend there. So now if we zoom back in again, we know that if prices comes up here, we would like to go short because we have all that confluence. So if there is a setup in this area, then we'll go short. So that is what we do on the daily. As you can see, we didn't put any new lines on here. All we did was we modified the existing lines. These are going to be perfect already. But if you need to adjust them because we have more touches somewhere, then you can. But we're on a nice figure, so that seems to be a good area to start selling. Now, if we look at the EMAs again here, like I mentioned that let's go back to the weekly. you can see this, the area that we are trading in here. Let me just highlight this. From say about from there to here, it's been trending, right? And in this area, a lot of it is been a volatile trend because it's only touching the blue line there on the weekly. So if you go to the daily, and then you can see how you can draw the trend line now and then wait for prices to respect the trend line before looking for entries there. If we take, for example, this one here, as prices are coming up toward the level that you've already drawn, yeah, you've drawn that level based on things that happened in the past year and your EMA. So in this area here is where you would look for a setup on your 15-minute to go short. So what we could do is just drop down there. So it's in that area. So around about the 4th of November. I'm dropping down to the 4-hourly chart now. And it's in an area of importance. And now 15-minute where we like looking for any entries. Around about the 4th of November. See the big highlighted area there. So when prices are coming up into this area, that is where we would start looking to trade short. Now, a lot of you, or not, I think Gavin would know, and no, whoever does the course with Mark Chapman would know that this just looks like an area that's being stop hunted all the time. But the good thing of what we have here is we have this weekly where we know exactly where to start looking for the stop hunt. We're not going to look for it anywhere else really. We're waiting for this to happen, and then we start looking for a stop hunt. Now, the beginner strategy shows you one technique of how to get into the market. And you know, in this course, you're going to learn 4 other techniques. It's all based on stop hunting. So you might know the technique based on the names that you've heard of Mark Chapman, but all of the techniques are qualified to add conviction for any trades that you put in. For me, there's going to be no subjectivity in whether the M pattern is correct now or whether the rat trap's final leg was too short or too long. It doesn't matter. Yeah. I'm waiting on you, Justin. I see you typing there. Oh, okay. All right, so we went down and then we know exactly in which direction we're going to trade once we get to the time frame. Once we drop down to the from the weekly chart, we already knew which is the correct time frame, which is the correct direction, and the entry zone and the potential target. So the weekly chart really gives us everything that we need to know before we start to trade. So now you know how to do the weekly chart and the daily chart, where you draw the lines with regards to the figure. So now we need to just show some examples of how this might play out on the charts. Yeah. Do you have any questions regarding that first of all? Okay. Okay, so let us quickly go through any random chart here. Do you have any charts that you would like to analyze and go through? We'll go through the daily, sorry, through the weekly, and then to the daily. Okay, the dollar versus the CAD. Okay. Okay. So based on the EMA that we are seeing here, yeah, what do you think you would like to trade long or short? Okay. Then would you want to start looking at taking some profits anytime soon now? That's where prices are. And this year is in the midpoint. And if we look to the left here, you can try and draw a figure, which is going to be your 1330 perhaps, because we're already so close. But it's probably on the 13. It's going to be there. And then we have that as an area. So Gavin, do you have your levels basically looking similar to that? I know you have your zones that you like drawing. Yeah. So we can see now that it's in this range because of the intertwining of the EMAs. There's no proper real trend going on here. So this is an identified range here. Also, you can even draw like a wedge sort of a situation going on there. Yeah, this is all on the weekly. Yeah. So if prices breaks out here, then that would be a next target to trade. And if this here breaks to the short, then that could be a next target to trade. But we can see this is some sort of a range. Yeah. So because we know that now, if we go down to the daily, sorry, not that one, then we can see that we could start looking for a resistance line and the wedge line here. This can be adjusted now because we are on a new time frame. So this is what you could do, adjusting the trend lines and stuff like that when you see, yeah, when you see it's possible. So for me, I wouldn't want to look for the manipulation short because of the fundamental view and all that. But if there was no fundamental view, then I would like to look for a short in this opportunity in this on this chart. So Gavin, you said that you're looking to go short, yeah. So now you know that there's opportunity to go short here based on the Heiken Ashi charts here. So now if you look at your normal charts, then you can see, okay, there's not yet an excursion beyond the mean there. Oh, you already took the stop on around here at the bottom there. Ah, okay, that's fine. So But what I'm saying is, if you wanted to go short anyway, then you could look at it there because of that level, and then that would be about 50 pips into it, and then here would also be around the same, yeah, round about there. But these types of charts are not easy to trade, yeah. When it starts intertwining like this, as I mentioned before, that this is more of a trend trading strategy. So I'm really looking for those long-term trends. If it does break through here and retest, we might try and get to there as a trend. But at the moment, this thing is like definitely not an attractive looking chart for me to start trading on. Yeah. Okay, so on the daily chart now, so we know everything about the weekly, yeah, but we don't know much about what we're going to do on the daily. So I'm going back to the daily chart on on the euro dollar, and then Johiru asked in last week, how do you know when this trend is going to change? Yeah, so you never know when the trend is going to change, but a good indicator is going to be, let me just remove these lines here to make it more simple. So these are all lines coming from the weekly now, yeah. So what we have on our daily chart now is, because you have our support and resistance and you have a trend line. So on the daily chart, what you could have, if you have a trend line that you can touch 3 times and you can just see it's going lower and lower all the time, and then that's your trend line, yeah. So what we have here is a trend line break in that situation. In this area, let me just change the color of that rectangle. Yeah. So in this area here, we can see that there is a trend line break. So what you do after a trend line break and you want to trend trade, you've got your target here based on your weekly, yeah, and you don't need this line anymore. That's why I mentioned you don't need a lot of lines on your weekly. All you need is really the 2 lines there. So now you have a trend line break and you didn't get into this trade here based on a stop hunt. Yeah, you've missed this trade, but you still have a massive target here. You still have a target, or your original target was 218 pips, and you've missed it by 100 pips. So a lot of us would now sit back and do nothing, yeah, because you've missed this nice little entry here. So if you can identify a trend that's been broken in that area, what you do is you drop down to the 4 hourly now, and then you notice your trend line break. So this here is your trend line break right there. We are now zooming into this area where the trend is broken. Are you with me on this so far? Because we are now on the 4 hourly chart, yeah? So we've missed this setup here. This is coming from the daily chart down, and this is a level on the daily. And this is a stop on that we've missed. Yeah. So now we're trying to get ourselves into a trade. So now we see there's a trend line that's broken here. Yeah, which now we can assume that this is going to go all the way up. It's just an assumption, and it's the probability of this happening is high. So we would like to reach that target. So how many more pips do we have to get there? We have 100 and 46 pips left to get to that target. So it's nice and big. If it was too close, then we wouldn't want this. It wouldn't be worth the risk. Yeah. So we've got this, we've identified the break, and then we can drop back down to our 15-minute chart again. Trying to find the area. Here we go. Okay. So because we know we're looking for a setup in this area, I want Gavin, because Gavin knows this type of thing very well. Yeah. Gavin, does that look like a stop hunt to you? We have our level here, 1, 2, 3, 4, numerous touches, and we have prices coming all the way down, wiping out the stops here. And it's in an area after this break. Remember, the trend line is broken in this area on the 4-hourly. Gavin, are you still there? For me, I can't see the detail well enough. Only the middle part is in doubt. But okay, overall. Okay. The thing is that what we'll be looking for in, let me draw this then more clearly. Would you agree with something like that then, Gavin? Thing is that if we look at the area again, everything has to do with the area that we are in. Because on the 4-hourly we have this trend line that's breaking here. It's clear we're going to have a breakout trader here in this case here on the 4-hourly. If we go back to the daily, then we can see there's a well-respected trend here. And in this area, if we're zooming in on the 4-hourly, yeah, there is a definite chance of some sort of manipulation in this area. Because we have everything going for it here. We have the EMA, we have the trend line that's breaking, and therefore we start looking, as soon as this breaks, we would start looking for a stop hunt on the 15-minute, because there is eyeballs on this 4-hourly trend line break. This is the trend line that's broken here very strongly. Do you see that? It's really broken. And then it comes back down, and then it comes back down toward this trend line that's been broken, and it tests all the time here. So we have our long traders waiting here, buying. They are buying here and buying here and buying here, and then finally it comes down and touches the 200 period moving average, and then it goes all the way back, all the way up. Okay, good. And then we can go even further now. Yeah. Again in that same area, and look at the trend line again being respected, comes all the way down. Now this one is a more complex one. Because this one has the entry cheese here, and then also this area is what I call the circle of liquidity, and I'm going to show you the entry that we use for this here. But this is a circle of liquidity, because all the stops are taken out before it's finally gone long. But the main thing to take away here the area that it's happened in after the break. There's your break, and we get one stop hunt there, another stop hunt there, and then comes all the way up. I mean, in this area, you should be taking your profits already. Or even if prices are coming all the way towards this 633 EMA, even in this area, you should start looking at taking some sort of profit on the table. So the main takeaway here is the areas that you can look at now, because before you could you only looked here to short, and you looked here to short, right? And then here you were looking for long trades. But now I'm just showing you that you could look in this area where it's broken as well. That's because we have a nice trend coming down. So we have the EMAs that's also broken. You have a trend line that's broken. You have your 36 period moving average that's broken in this area. So now you've missed this trade. You were thinking that prices are going to come up here and then come back short, but it didn't. It actually broke through. So once it breaks through, then you can use your next target here. So there's now two areas to look for a trade instead of only just the range. So what you're looking for is the same thing. You're looking for a stop hunt here, you're looking for a stop hunt there and here, and also you're looking for a stop hunt there. Does it make sense that you have another area to look for a trade now? Let's see if we can find another example. Yeah, let's see what looks good here. Like here we have an uptrend, yeah? It's going up. But this is now not that example. But if prices were to break through the trend line now on the daily, then you would drop down to the 4 hourly and you'll be starting to look for the setups here or the stop hunts here. Yeah, Gavin. Oh, anything. There is no entry ever that I trade that isn't a stop that has been hunted. No matter what, it's always going to be an. When you see an M, there were stops there first before it went down. And with a W, the same thing. So I'm never taking an entry if there isn't any stop hunts. Let's have a look at this one, just for interest's sake. Yeah, let's look at this. We try and draw a trend line there. Yeah, and this is our target. So I'd be trading here. Take that example there. So that's the 4 hourly. So let's there. Now, traditionally, you're going to look at that as a head and shoulder pattern there before it comes down. But a head and shoulder pattern is just a stop hunt. And who was hunted in this case here? There were guys. This is a trend line. Everybody wants to go short in this area somewhere. Yeah. So these shorts here were taken out by these guys here in the form of a head and shoulder. I don't know if you know that term. Yeah. But that is what that is here. In this case here, we have these stops taken out there. Even if it's just one pip, you know, it's still a hunted thing. Here's another one. Like if you look at this here, let me show you on with if I draw it with a pen here. Like in the area you're looking for an M pattern. In this area, you are looking for an M pattern. So no matter where you're going, you're looking for an M, whether it's going to be the rat trap look, Gavin, or whether it's going to be the failure to follow through sort of a thing. These guys here has taken out any sort of stops in that area there. So no matter what, the entry is always going to be a stop hunting scenario. The terminology doesn't matter. The terminology is just so that we can talk easily about it. For me, it's all the same as long as it hits the target at the bottom there. As long as there's something that I can identify at that entry point. So whether it be a rat trap failure to follow through, or a circle of liquidity, or any other terminology, a head and shoulder pattern, or a pinhead, or a pin bar, or any sort of price action looking candle, it doesn't matter. If we are on an area, look for something that looks like an M, or look for something that looks like a W. Iceberg is just the same thing. Iceberg is going to be, they call the typical name for this iceberg is also this head and shoulders, but it's like a multiple head and shoulders with Elliott wave, and then it's a complex correction. That's what they call a iceberg with Elliott wave. All the terminologies doesn't matter. The thing is, when you get to that level, you are looking. But if you look at the something called an iceberg, is more, it's a complex correction. Yeah, you get your level over there and this. So now it's that. So now the iceberg is a long drawn out correction before. It doesn't matter how long it is, and then it comes down. So there's my head. Oh, this is my head. This is my left shoulder, and then that's my right shoulder before it goes down. Call it an iceberg. Yeah. Or you can call it there, and then it's my M. It doesn't matter what it's called. You're looking to go short when it hits this level, irrespective of what it is. Because we only use this terminology so that we can talk, so that we can communicate with each other. If you say iceberg, then I know what you're saying. But the important thing is that we are going short when we get to that level, and it's something that looks like an M. If it's a difficult, ugly M, or if it's a nice M, as long as prices has gone up and come down, no matter how it's coming down, and then it goes back up again and then down, that's an M. This is where I'm getting at here. It's just the level. So what we know so far is where to find the levels on the weekly, and then dropping down to the daily chart. And then now we have another opportunity to try and find an opportunity going short. Like in this case here now, this is our 4-hourly chart, yeah? So we could start looking to go long. So if we look at our daily chart, let's first go to our weekly. So if we didn't see the weekly, then we wouldn't know that it would be nice to go short in this place, yeah? If we didn't come to the weekly first. But now we can see, oh, it's actually better to go short. But if you come to the daily, then it looks better to go long toward that area. So what we could do is then go smaller and find out what stop hunt are we actually getting here. Are we getting stop hunts to go long, or stop hunts to go short? So that you can finally decide. And if you go long, then that is my target up here, 70 pips. But if you're going short, then that's my target here, 200 pips. So I would like to go short instead of long. So I'd be looking for shorting opportunities always here. So if I do go back to the 4 hourly and I see this happening here, I wouldn't bother with the long because I don't want that 70 pips there. I would prefer getting the short. And anyway, if you were looking at this on the daily chart, you would have wanted to be in here anyway, going short and taking some profits there and then trend trading this going down all the time. And the trend trade is going to happen with your 4 hourly chart now. So what you are looking for is a lower low there. Sorry, not that. You're looking to go lower and then back up to here to the trend line and then looking for a opportunity to go short there. All the way down toward your target, which is there. There. To 300 pip potential target. Who said my Look, I could, let me just that I'm guessing this is Gavin's comment. Yes. And that's why we like you here, Gavin. Yeah, so any questions on that? Look, don't bother too much with all of this. The only idea, the thing that I'm asking you to know here is that you have another opportunity to look for a trade. You have somewhere else on the chart to look for a trade. Let's see if we can find one last example. The homework hopefully is going to clear up this for you. Yeah. Okay. We have we always start on the weekly, yeah. So we have a support level there. Now we look to the left and we see, okay, this is 85.25. So what you do is you find out 85.50 or 85.30, just to give it a round number there, yeah. So 85.30, and then we have our resistance area there as a first. If it ever goes the other way, then that's what I want to do. Yeah. So you could start looking for a manipulation even here. So has it happened already? Let's have a look on the 15-minute. Yeah. So you've drawn this line here, and we can see there is definitely a stop hunt in that area, and then prices has gone up. And then now this year is an area of importance, and this looks like it could be a trend line. Yeah. So in this example, there's a trend line coming down, trying to follow the 36 EMA, which means you are waiting on that to start happening first. It needs to break. So this isn't a very good example. The best examples are going to be historic examples like this one here, perhaps. So we're looking for a trend line that's broken in this area there. So then you would drop down to the 4 hourly and look for a setup going long. So as we can see in this example, it's gone, it's gone up by 600 pips after the break of the trend line there. Right, where's Gavin? Is he still there? Look, tell me what if you understand the next piece that I'm trying to give you here. Just let me know if you understand the next piece. You mean from the on this chart here? You mean you bought here and there's a trend line there? Yeah, it's an area where you would like to take some profit, perhaps, but your target was always going to be here. It's trade management. I would put with my trading, I would take 3 positions here. The first one, I would take the first profits off the table, like the midpoint thing, book those profits and bank them. Leave the next trade on with my stop loss still at the bottom there. And the third position, I would then move my stop to break even. But that's all going to be in the risk. Oh, you mean where prices are right now, Justin? You mean this area? Yeah, I would be anything that serves as a barrier to the price. That is where I would manage the trade. This is a manageable area that if I've traded long here, even where prices are now, it's manageable. The reason is because we are on the 12 EMA. So if I do drop down to the 15-minute now and I see there's a stop hunt going short and I've traded long, then I'll have to start thinking what's going on here. Should I start taking my profits off the table or what should I be doing? Yeah. So it all depends on what happens in this area now. Yeah. But for sure, it would be an area where I would take off profits off the table because that's already 50 pips. That's enough for the first opportunity. I've banked that profits now, and now I'm starting to play around risk-free with whether this thing is going to, on the daily, break that and go up, or I'm gonna um, take off more of the trades there, or whatever I'm going to do. But it's a definite area to look at on the chart. Let me just draw what I mean quickly and see if it makes any more sense. If you have your barriers here, yeah. You have your area of resistance there and your area of resistance there, right? And now you've seen prices coming down in a trending sort of a fashion. Now, I'm going to show you properly how to do the trends later in the trending course, yeah. But now you have your 3 touches there of your trend line and everything is great. And here, there was a stop hunt and you've missed that stop hunt. But now, prices breaks through the trend line on your daily. That is what you're looking for as well. You've missed that. Everybody already, we know that we are anyway looking for a trade here. Yeah? We're looking for a trade on this line and we're looking for a trade when it gets there. But what we are also looking for now with this advanced strategy is we're looking for that. We're looking for a proper trend line break, and a proper trend is one that has 1, 2, at least 3 touches there, and it's coming down. Why 3 touches? Because we have 0, 1, 2, 3, 4, and then 5. That's Elliott wave telling us that that's a proper trend there, confirmed. So you've taken that trade, you didn't take that trade, and now you've missed out. So you've suffered that fear of missing out. But now you have another opportunity to trade it long toward that there. When that breaks on the daily, you drop down to the 4-hourly chart now. Now on the 4-hourly chart, you see your trend line is there and it's broken up there, right? So what you're looking for is that the retracement there. And now you're looking on your 15-minute in that area for a stop hunt to go long. So that there is your 4-hourly breaking. And then that there is hopefully on your 15-minute zoomed in the direction of where you already wanted to trade. You wanted to trade here on this, but you've missed it. So you've got another opportunity there. So it's a trend line break on the daily. Okay, great. Joel says it's clear. So the homework is going to be to find from the 28 pairs, any amount of charts that you can find where you do have a trend line that has been broken on the daily. Yeah. And then you drop down to the 4-hourly and see how it comes back to coming, like it's breaking in that area, and then it's coming back, and then you look for a stop hunting. So you can look at it all for historic examples. Yeah. So the step number 1 is looking for the trend line break. Step number 2 is dropping to the 4-hourly and watching for the retracement. It's always going to be better if you have a retracement of at least 50% of that break. Not there. Because let me show you. Now it breaks here, and this is about 50% retracement. So now we don't want the retracement there and then going up. We don't want that. We don't want that. We want a nice bigger retracement, like 50% of the line here at least. Then we look for the entries here on the 15-minute. Just any sort of a entry, because you don't know exactly the entries, but if you see you have any W looking pattern or M looking pattern to go short, then you go. So Gavin, again, if you have the W pattern like this, the iceberg type, as long as it's a W, then it's just it's just a W, man. Whatever you want to name it. Just look for a stop. I just call the whole thing a stop hunt because we don't enter any trades if there was no stop hunt involved. So what we're doing is trying to identify another area on the chart to look for a trade. So is the homework clear? From the 28 pairs, you look for a trend line break on the daily chart. Then once you see the trend line broken, you drop to the 4-hourly, and then you watch for a retracement of at least 50% of that break. And then the 15-minute for any sort of a stop on that you know of. And then that's what we do. And again, we don't need to send pictures. We will do a call. So let me know when you are done. And then we will sit on those charts that you've found, and then we will see if you understood it or not. Okay, does the homework make thanks clear? Are we using fibs to measure? You can use your eyeballs to measure if it is 50% or not. But if you want to use fib, then it's fine. So there's my line. Where's halfway? There. It's easy. 25 is there. 75 is there. 100% is there. So it's, yeah, you can use whatever you feel you need. Yeah, it's just halfway of the line. You want that retracement at least there. We don't like it when it's too, because when it happens here, you are too close to your target already. We want a good price. Yeah, if it comes here, it's fine. Yeah, try and make it not go more than the 786. Jahirul will know why we use that. So don't let it retrace back more than 78.6. Isn't that cool, Jairil, that 786 is also part of the fib numbers, the 78.6. Yeah, so that is why for me it's so strong, and I really believe in it a lot. In that 786, Mark will also tell you, not Chapman. Talking about the Mark in here. Okay, guys, so you understand the homework. Just send me a message when you are done. Doesn't matter when, and then anytime, just send me. Then we will go over your homework. At least let's get 3 charts, at least historic, so that you can show me the actual target that you've reached. Yeah, this barrier here, there. Yeah. So from here, you want a nice distance there. You've missed the trade. Remember, you've missed the trade. And then for the next lesson, we're going to do this doodle thing again, where we just all decide which is the best date. Yeah. So before we go, I just want that everybody knows. Yeah. I'll send it to you. That everybody knows how to do the homework at least. Yeah. Before I go here. So Gavin first wants to watch this again before he decides he knows what to do with the homework. Okay, so it's up to me now. Gavin just, gave me he put the ball into my court. So I first need to send this recording, and then he'll be able to do the homework. Okay, good stuff, good stuff. And but everyone else, they are fine to do the homework right now. Okay, no worries, guys. So I'm gonna leave you with that. I'll send the video in that link that we had the last time, and then let me know when you're done, and also the doodle thing for the homework. Okay, guys. Speak to you later.